And the hype was just palpable in that every small investor was just piling in. And if there's one thing in my 20-year career that I've noticed is that when that happens, it's usually the end of a move.
Here at Liberty in Finance, we're licensed brokers with Miles Franklin. We are standing by the inventory, ready to make sure you get what you need, even into the wee hours of night and on weekends, because preparedness doesn't stop. Call us 1-888-81-LIBERTY. That's 1-888-815-4237.
Hey everyone, this is Elijah K. Johnson with Liberty in Finance. And back with us today is our good friend Gareth Soloway from InTheMoneyStocks.com. Thank you so much for joining us, Gareth.
Thank you for having me back, Elijah. Great to be here.
It's great to have you, and congrats on the prediction about Bitcoin. You had, on our channel multiple times, predicted that Bitcoin could fall as low as 20,000 or even lower. That's what we have seen. And I wanted to ask you, so can you share with our viewers how you saw this and where you are seeing Bitcoin will go from here?
Yeah, sure. So I mean, rewinding back to October, November, there were a lot of signs that kept on bothering me in regards to Bitcoin. So number one, it was that the hype amongst retail investors. I mean, it was just every month was a new higher target. It was first 50,000, then 80,000, and it just, 100,000. Then you started hearing price targets of like 250 and 500 within months. And the hype was just palpable in that every small investor was just piling in. And if there's one thing in my 20-year career that I've noticed is that when that happens, it's usually the end of a move, right? It's when, I wouldn't say that the institutions get the suckers in, but in many situations, it's kind of like that, where the John Q. Publics that maybe have never heard of Bitcoin, they say to themselves, you know what? This is going to be easy money. And I've learned the hard way that there's no such thing as easy money in the stock market or in cryptocurrency. So those were some signals there. You also had a double top on the daily chart, which everyone kept on saying, hey, it's going to break out and break out. And it did go above briefly. There were two specific days where you closed above that April high of 2021. And what was interesting is the next days it always came back below, right? It always sold back off. And I was pondering that, and I was thinking, what's going on here? Why is that happening? If there's so many buyers, how is it not able to just blow through this high? And the answer is there were big sellers selling, right? So you had big sellers coming in, and they were selling into that. They knew the hype was there. It coincided, interestingly enough, with the futures ETF, BITO, launching. And if you go back to 2017, what's so fascinating is that in 2017, the high of that cycle, when we hit about 20,000, that was when the futures launched for Bitcoin. So there was weird like symmetry there going on. In addition, I think the biggest thing is noticing the hype was very similar to the .com bubble. And ultimately, we saw the chart of Bitcoin starting to form the exact pattern that Amazon had in 2000, going into the collapse of the .coms, where Amazon went from 112 to about $6. So, I mean, there were just so many warning signs out there. I mean, just some other just brief ones. But when you start to see coins that are created by for jokes, like meme coins, and they get billion-dollar valuations, that's got to be an alert as well. So again, I hope, listen, it's too late to react at this point. If people bought at 65 or 60 or 50, it's too late at this point to react. In fact, I'm starting to look to buy some Bitcoin down here, and I have picked up a little bit. But just learn how, when everyone is screaming about some direction, whether it's bullish or bearish, think for yourself and say, let me step back here and not just follow blindly like a lemming over a cliff. So I mean, yeah, it was some crazy stuff, Elijah. I mean, just wild stuff looking back, but it was clear signals that we were likely going to head much, much lower. And one of the things, too, to keep in mind is that you had a cycle. Every 4 years, there's been a cycle in Bitcoin. 2009, it was created. 2013, you had a massive surge to the upside. 2017, and then 2021. and each cycle 80 to 85% correction. So, just following history gave us a good basis to say it at least will go down to 20,000. My ultimate downside target now has been adjusted to 12,000 after we get a bounce in this 20,000 range.
Now, what keeps you bullish long term? Because you mentioned it could go lower, but really just about 12,000 there. What keeps you bullish long term? Because there are people who are giving up, saying, Bitcoin's over, it's going to zero.
Yeah. And by the way, that's what you want to start to hear, but we need to hear I would say you need to hear 90% of people saying that, not just about 10. Right now it's 10, maybe 15%. You need to see that switch totally to the opposite spectrum, and then you'll start to see a bottom, because that's what you saw in 2018. I still remember vividly in 2017 when it was a massive bull market. CNBC had the Bitcoin ticker on the bottom of their screen all the time, and they always talked about Bitcoin. And then once the collapse happened, all of a sudden, like in mid-2018, it vanished. And they didn't even talk about Bitcoin. It was like, we're not even going to mention it. And that was the signal, that bearishness that no one wanted to even talk about it. That was the signal that it was starting to become a viable option. So for me, it's looking at what Bitcoin represents. It represents a different monetary structure where you have a limited amount that can be ever mined versus the US dollar versus all the currencies of the globe where governments can just print and print and print. And I think that's the bottom line. It's also that the adoption has started. You have major players out there. You have institutions starting to get involved. You have people starting to accept it as a form of kind of digital gold. Still has a long way to go to get there. But again, these are the things that I think the general world are yearning for. They're yearning for something where if the governments continue to print, and even though the governments have stopped for now, I truly believe they will start again as soon as we get into a bad recession. There's a need for a place to store your money where it doesn't get diluted, and that there's a maximum run on it.
Now, a lot of the people in our community really look to hard assets, for example, gold and silver, to be that protection in tough times and in times of what we're seeing right now of inflation, as we're seeing the value of the dollar really disappear. Now, your perspective on that it seems like a lot of people point out that Bitcoin isn't tangible in that same way that precious metals are. Your perspective on that, why do you have confidence that it is going to be seen as kind of a safe haven in these times?
Yeah, and that's a great question, because gold, I'm a huge fan of gold too, but I do think that gold, so I've bought physical gold, I've bought physical silver. Once you buy physical gold and silver, it's a little on the harder side to move it quickly. Like if you go to a pawn shop, they're going to give you a discount of like 20-30% on it. If you go and sell it on, back to a gold dealer, they're going to give you 10% less at least of the value. And again, carrying around a bag full of gold isn't exactly the easiest thing to do, right? So I think that there's a need for a digitalized asset that is very easy to move. And if you talk to people in Venezuela or in different areas of the world where their countries are seeing, hundreds of percentage of inflation per year, there's really a need for that. And then there's also a need for people to be able to send payments instantaneously for very minimal amounts of cost overseas to different, like let's say you have a family member that needs help in some country. Very quickly, you send these cryptocurrency payments. So there's a lot of use cases for these types of things. And also just the fact that physical gold itself is a little bit of a harder thing to move, I think makes people say, okay, we need something different here that will work, that has a stated run. And remember, people say, well, the dollar's the dollar. Well, the dollar is the dollar. The only thing it's backed by is the government, which continues to basically spend, and will ultimately have to spend more and more down the line. And you have a Federal Reserve who's printing more dollars constantly, obviously not right now, but they will go back to it. So you have to have an asset that has this kind of firm maximum. And I really think that people yearn for that.
And when it comes to the many governments around the world rolling out their own cryptocurrencies, and the U.S. Is one of them that looks like they might do it sometime soon in the next year or couple of years, do you see that as any competition to more decentralized cryptocurrencies like Bitcoin?
I don't see it as much. And the main reason is, always remember this: if the government is issuing any cryptocurrency, and basically it's a digitalized dollar or the digital yuan, right? We know that China's come out with that. is that they still have control to click a button. In fact, it's easier probably for them to just click a button and create another billion or trillion or quadrillion. So they're, you get the same kind of verbiage, digital currency, cryptocurrency, but really it's just as if it's numbers on a computer screen. It's the same thing. And so I think that for the most part, as people learn more and more about these digitalized currencies like the digital dollar, it's not really anything different than what we have now. It's probably just a little bit easier for them to print more of it.
Very good points there. And I did want to turn now to what we are seeing. We've been seeing a crash, obviously, in Bitcoin, but we're also seeing quite a bit of a pullback in other markets. If we look at the stock market from year to date, it's down about 20%, depending on the indices you're looking at, But can you share with our viewers what you're seeing right now in the stock market, and do we have further to fall, in your opinion?
Yeah, so let's take a look at the S&P chart. And the S&P today looks like it just closed down just very slightly on the day, or basically flat. But basically, you're at a point where you're going to get these bigger bounces. But notice how the trajectory of the market has now shifted to lower highs and lower lows. So this is clearly telling us that there's this kind of mountaintop in the market, and we're now starting to curl over. And if you think about it, it makes a lot of sense, because the Federal Reserve was printing all the way up. I mean, basically, in all fairness, since 2009, even before that, they've been printing and stimulating. We had QE, QE1, QE2, QE2.5, and all the way up to the COVID massive stimulus. And if you look at the balance sheet of the Fed, by the way, and the amount of money in the system from when COVID began, it is like a vertical line up. It's scary how much money was just created there. But the bottom line is, with inflation at 8-9%, you have to realize that the markets were inflated. Cryptocurrency was inflated because of the Fed, and now that's being deflated. So in the very least, I'm looking at a market on the S&P that has to come back to this 3,400 level, which is that former COVID high. That's assuming no recession. Right. So again, if you're saying, OK, the Fed is going to magically create a soft landing here, I don't believe that. But if you think in that determination, then in the very least, we need to come back to this level. If we get a recession, which is in my book for late 2022, early 2023, now you're talking about maybe seeing even more downside. I could see this low end right here. There's a trend line. You can see only COVID, the panic of COVID pierced it. Otherwise, you have this perfect trend line to these lows. And that would be my next downside target, which is right around 3,000 on the S&P 500. So we're talking like 20% lower potentially at bare minimum if we get into a little bit of a recession by late this year, early next year. So again, I hate to be a bear in this scenario, but in all fairness, everyone said don't fight the Fed. And that was when we were in a bull market, right? And it was what everyone said. We heard it every which way. Well, you kind of have to say, okay, well, now don't fight the Fed. Well, what does that mean? Well, it means that they're pulling out the money and they want the stock market to come down. What they're trying to do is make people bring in the amount of money they have, or they have less money, which then will make them spend less, which will then bring down prices. And again, obviously, oil coming down will help that as well. But they're really trying to get inflation down to a reasonable level. They've said 2%. They're not going to get it back to 2%, folks. The genie's out of the bottle. My guess is they'll get it to 4%, and then it's going to be sticky between 4 and 5%. And then when you have a recession, which is inevitable, even if they do a soft landing, you're eventually going to have a recession. That's just how cycles work. Well, guess what? They're going to say, 4% inflation, but 10% unemployment or 15% unemployment. Let's start printing again, right? So they're going to start printing again. And that's where, in my opinion, Bitcoin really starts to have its day in the sun. The next big leg up starts at that point. Whether or not stocks will react positively, we'll have to see, because I do worry that the recession then creates a drop in earnings, and then you have to reevaluate the markets. But ultimately, Bitcoin, I think when the Fed kicks in those printing presses again, that's where the next bull market starts.
Do you see the same situation for precious metals? Are they going to make the move when the Fed pivots?
Yeah, so I think my guess is we've already have a breakout on gold, right? So if you look at this trend line here, this was your high in 2020. You had about a year and a half of consolidation, and then you finally broke out here, and now you've actually hit the scene of the crime, which is the retrace line. That's very normal in charts. and now you're kind of hovering here. In general, gold is think about it, gold is like the sloth, right? We know sloths move really, really slow. It's just a really mature asset, so it takes a long time to move. But I do think that it's slowly going to inch up, take out the highs here, and then be off to the races. Because again, I think slowly the markets are going to realize, investors are going to realize that inflation is not going back to 2%. The Fed has let the genie out of the bottle here. The Fed is not going to be easily able to kind of control the downward move in the economy, which likely means recession. It means fear. It means stocks aren't going to be the place to be as much anymore. And I think gold is an underinvested asset for a lot of hedge fund managers, very, very underinvested, because it doesn't get them the big returns that the Fed was able to generate by printing money in stocks like Tesla and all these other names. And so you're going to see at some point a rotation into gold, which should do very, very well. And again, just look to the 1970s. If you want to see gold performing, the chart from 2020, or I should say from 2018 down here to 2020, and then this consolidation and the breakout, almost picture perfect to the 1970s into the late 70s. And gold went up 9 times, I think, in the late 70s, not 9x. I don't think it'll do that this time because, again, it's obviously a lot higher. But I do think, you could be talking about a $5,000 per price gold price by 2025.
So what you're saying is when the stock market is selling off because the Fed is tightening, investors will look towards gold because stocks aren't giving any return?
Yeah, and I think fund managers will start to recognize, in addition to that you have a new scenario where inflation is not going away, right? So everyone's kind of in the camp, all right, Fed's going to aggressively tighten. It's going to bring back inflation back to 2%. It's all going to go back to the way it was for the past 20 years. I'm not buying that. You have wage. I think one of the biggest. So it's a great thing for people to make more money, but it also has an impact on inflation. And when companies are trying to hire workers and they're not getting anyone for $12 an hour, so they have to offer $20 an hour or $25 an hour, that's massive wage inflation that then has to be passed along to consumers in the terms of higher prices. So, the business doesn't say, well, let's raise prices by 100% because we have to raise wages by 100%. What they do is they say, let's raise prices this year 10 or 15%, next year 10 or 15%. And you see this longer kind of inflationary pressure because of a rise in wages. So that's my guess, is that that's what you're going to see in terms of interest rates, inflation, and all these other things. It's going to be a longer term impact.
And we did actually just see Jerome Powell, the chairman of the Fed, make his testimony today. And he stressed, the importance of bringing down inflation. But as you mentioned, I don't see how anybody can actually think that the Fed raising rates by the amount that they have been and plan to do is actually going to bring down inflation. If you look at what happened back in the 1980s with that inflation, they had to bring rates to double digits to actually make inflation come down.
Yeah, and think about that. We have a 3.3 10-year, give or take, and look at the markets freaking out. You're seeing the housing market just screech to a halt because taking out a loan on a house now is so expensive with home prices going where they have. So there's already a major impact because of a 3% plus 10-year. I can't even imagine a 10% 10-year. But yeah, you're right. So I think oil coming down will help in general because we know oil is so pervasive. But overall, it's when you look at food, it's also the labor costs. People picking apples or this and that are going to cause those raises. And that's not, you don't see people's wages dropping back down. Like, you don't go to $20 an hour and then your boss comes back and says, well, inflation's back down, we're going to drop you back to $10 an hour. It doesn't happen that way.
Definitely. And could we, before we let you go, could we have you analyze silver for us? What do you see happening in the silver market?
Silver continues to be one of the trickier ones in the near term to analyze. And again, the overall longer term pattern is still bullish. So you have this low pivot to this high pivot. And then for the last 2+ years, we've just chopped sideways. We're at the lower range. The reason why it's a little trickier is because not only is it a store of safety, which is great, like it's a goldish type play, but it's also industrial, right? So if you see a massive slowdown in the global economy, there's less demand for silver, and it kind of offsets that security of being in something like a gold. So I think overall, inflation, again, like I said, it's not going away. It may come down. I do think it'll come down, but it's not going away. So silver will perform over the next multiple years. But in the near term, to be honest, I'm not sure if it could dip down here. This would be a major support around $19 on silver. One of the things I will look for here is, let me just draw this line here. This would be a big breakout line. So you can see you can kind of connect this high through here to here. So if silver can kind of get over 26, then it starts to really look like it might get that big breakout. So right now, really, if you look at this, and I have a bunch of lines in here, and I don't mean to confuse anyone about anything, but really the biggest thing on silver you need to recognize is that for now, since 2020, you've been just chopping up and down and up and down. Ultimately, this is a bullish macro pattern. So macro means longer term. So it's going to go longer term to the upside. But again, could it go down from 21 where it is now to 19? Yeah, it could.
And any thoughts on how all these markets will be impacted by the strength in the US dollar?
Yeah, so I think that you have to recognize that. And by the way, that's a great point, too, is because just going back to our discussion on gold, right? So if you look at the US dollar, I mean, look at the run up on the dollar that we've had, and then also point that in the direction of gold, right? So I know, Elijah, you know that usually gold moves inversely to the price of the dollar, right? I mean, if the dollar is down, gold goes up and vice versa. So the fact that gold has held up as well as it has in this massive move up on the dollar is actually a very, very bullish thing for the metal itself. And in regards to the dollar, I'm actually bearish now on the dollar. If you look at this chart going back to 2015, you have a pretty clear trend line right up here, and we're right at the high end of that. Now you can see pierced over here a little bit, but what this tells me is that it's very likely the dollar is in a topping area here, and we might see a pullback, which again for me says buy gold, maybe silver. Commodities probably will outperform here, especially if the dollar starts to drop.
All right. Well, Gareth Soloway, we really appreciate your time today. Where can our viewers find you if they're interested in learning more? And also, did you want to share any last thoughts for our viewers?
Yeah, I think the last thought I would say is just remember that in bear markets, in these type of volatile times where the Fed isn't backstopping things, where again, in the last couple of years, we would have a period where it was like a year with only 3% pullbacks. Obviously, a much different market. We have daily 3% moves in the equity markets now. So you have to be careful. You have to know what you're doing. This isn't the market where you just close your eyes, throw a dart, and just magically make money. This is really what separates the great traders and investors from those that just make money in bull markets. So again, it takes some education. Education is so important when it comes to learning and doing the right thing and kind of avoiding the hype. So try to get educated, try to learn something new about trading every single day. One little thing new will change everything over the course of weeks and months in your trading and your investing. And you can find me on Twitter at Gareth Soloway, or inthemoneystocks.com is my website, as well as verifiedinvestingcrypto.com.
All right, Gareth, once again, thank you so much for your time and God bless.
Thank you so much. You too.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we will let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be double boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Elijah, my brother Kaiser, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.